Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is January 22nd, 2026, and we're diving into Mobileye's recently released fourth quarter and full year 2025 earnings report. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Mobileye has been making waves in the autonomous driving and AI sectors, and their latest earnings report provides some fascinating insights into their performance and future direction.
Revenue and profitability overview. Let's start with the revenue figures. Mobileye reported a fourth quarter revenue of $446 million, which is a 9% decrease compared to the same period last year. However, their full-year revenue for 2025 increased by 15% to $1.894 billion. John, what are your thoughts on these numbers?
The fourth quarter decline is primarily due to a reduction in IQ SoC volumes, which was a result of balancing supply and demand. Despite this, the full-year growth is impressive, driven by strong demand for their advanced driver assistance systems and autonomous vehicle technologies. The adjusted EPS of 06 cents also beat the forecast of 1 cent, which is a positive surprise for investors.
Operational efficiencies and future outlook. Mobileye's operational efficiency seems to be a strong point, with net cash from operating activities up 51% year over year to $602 million. They also ended the year with $1.8 billion in cash and cash equivalents. How does this position them for 2026, John?
These figures highlight Mobileye's robust cash-generating capabilities, which provide a solid foundation for future investments and strategic initiatives. Their guidance for 2026 suggests flat to 5% revenue growth, indicating cautious optimism as they integrate the Mentee Robotics acquisition and expand their product offerings.
Financial challenges and risks. Despite the positive aspects, Mobileye faced some financial challenges in the fourth quarter, with an operating loss of $140 million and a gross margin decrease to 45%. What are the risks they need to address moving forward?
The decrease in gross margin and operating loss are concerning, primarily driven by higher costs and lower revenue. Mobileye needs to manage these expenses carefully while continuing to innovate and expand. The integration of Mentee Robotics will also require strategic focus to ensure it contributes positively to their financials.
CEO's vision and strategic direction. Mobileye's CEO, Prof. Amnon Shashua, expressed pride in the 2025 results and emphasized their ambition to be a comprehensive leader in physical AI. How does this vision align with their current strategy?
Professor Shashua's vision is well aligned with Mobileye's strategic initiatives. Their focus on expanding their product portfolio and capitalizing on rising demand for autonomous systems positions them well for future growth. The emphasis on physical AI, encompassing both autonomous vehicles and humanoid robotics, is a forward-thinking approach that could drive long-term success.